Hey everyone, me Kevin here. Boy oh boy, you're going to want to get life insurance after this one by going to metkevin.com/life. If you had tendies today and they got wiped out because of what happened to Apple, here's why what happened to Apple today is actually good news, and that's what we're going to talk about. But first, in case you haven't heard about what's going on with Apple, let's go ahead and give it to you. Apple has officially joined the companies that are planning to slow hiring. This obviously follows other companies that we've also seen announce slowing hiring or potentially even announcing or warning of layoffs, like Mark Zuck, who's suggested layoffs at least 2 or 3 times so far this year over at Facebook, Meta. Tesla laying off obviously 10% of their workforce, their white-collar workforce, not their factory workers. Google, Amazon slowing hiring. Snapchat, Vimeo just announcing today is slowing in hiring, amongst obviously a host of other companies, whether they're real estate companies, banks laying off mortgage departments. Lots of layoffs and job losses are coming. Now, still at the same time, we somehow gained 370,000 jobs last month, and unemployment claims, while they're ticking up, they're actually not really exploding, so it's kind of weird. But in case you're wondering why your attendees went away today, it is because of Apple, because they're warning, and these kind of leaks come from sources that aren't supposed to be talking on this, but it's been confirmed by multiple folks now, according to Bloomberg. Multiple leaks that talk to Bloomberg are confirming that Apple is planning on slowing hiring and spending, at least on certain teams, because of a potential economic slowdown and uncertainty. Now, the company's apparently still reportedly planning on releasing their major product roadmap, including their VR headset in 2023. Apple's down 16% this year, in line with the S&P 500. But a lot of folks are wondering, is this potentially just the start? Are companies starting to actually see real slides in sales? And are companies realizing that, we're not going to meet next quarter guide, and we're certainly not going to meet full year guide? And I think that's what's creating a little bit of fear in markets right now, that next quarter, not only are we going to see that $8 billion supply chain hit that Apple had warned us about, but possibly also other misses on top of that. So that's creating some uncertainty. And of course, when Apple moves, the market moves. And so the broader market is just becoming a little bit more shaky and fearful about, we're probably going to go into an earnings recession and a growth recession, if not a full-blown recession. Now, before I talk about why this is actually good, I just want to define those really quickly. Remember the differences. A real recession is generally 2 negative quarters of GDP, and then you got to get a bunch of economists together to actually define it as a recession, which happens like many, many months after the actual recession, which is kind of annoying and stupid. A growth recession is just when you have growth declining, and an earnings recession is when you have earnings declining, but you're not necessarily in an actual GDP recession, right? So your country can be in recession, companies can be in recession, company growth could be in recession, so many different kinds. The point is, things are slowing down, right? And this all comes after Tim Cook already said they're seeing inflation, they're fighting inflation with higher freight spending, and this is kind of a rare thing for Apple. Apple generally doesn't take the foot off the gas. You know, they did in 2019 when iPhone sales were slowing down. They did a little bit in retail stores in April. But I think the broader implications here, and this is in addition to now breaking news that it looks like there's going to be another lawsuit over antitrust violations against Apple. We'll talk about that in just a moment. But there's some broad implications of this, and I want to talk about those because they really affect all of the companies that we're looking at and investing in. Of course, no video would be complete, though, without reminding you about that 50% off coupon code that expires soon, and I'm on my way over to Munich. So if you're in Munich, say something in the comments. Shout out to you Germans. I was just in Frieden and Düsseldorf and Gronau and Gescher. So if you're in any of these places, howdy. Okay, so broader implications that we want to take away from this. One, overhiring. Look, companies just straight up overhired during the pandemic. It is what it is. There was essentially employee hoarding going on. There was such a massive shortage for employees that folks overhired just to have employees, because it would be better to overhire and then thin later as necessary than to not have the staff you need to launch. This is actually a very common business strategy. It's focused on growth, and when you need to, you can always trim. It's just really, really, really difficult to grow a business if you don't have enough talent or you don't have enough resources. Yeah, you could always, I hate to say it, but you could always fire people. And that's an impression that companies tend to have. And it's very sad, but it's just the reality of a capitalistic world. You want to attract as much talent as you can, and you want to grow into using that talent. You want to expand beyond needing that talent to where now you need to hire more talent. And then if a recession comes, sorry, labor is a variable cost. Economics 101, okay? Fixed costs, that's like the lease or the mortgage on your house or your building that you're working out of or whatever. But in terms of variable costs for employees, your variable cost, which is very similar to an airplane. An airplane is a fixed cost. Gas and the fuel for that airplane is a variable cost. You don't fly, you don't spend money on gas. So you want to save money, maybe don't fly as much. You want to spend less money on your company, have less employees. And then what can we actually finally start doing? Finally, we can start increasing productivity. And this is where the positive comes in my opinion. Now we're going to go for a walk because it's getting really hot here, so you're going to get a little close up here for a second. By the way, quick mention, how many of you have actually seen this? Check this out. Single flavored Haribo bags. You just pick the flavor you want, and you can buy them here in Germany. These are also much better because they're made with real fruit juices rather than all the fake stuff. I like them so much more. So much better, so much tastier. But anyway, so why is increasing productivity so important? Well, here's the thing, and I've been saying this actually since the pandemic. One of the great things about recessions is they allow us to go into great companies and basically weed them out. You could go in and get rid of all the slush, all the people who aren't really working hard, who aren't motivated, who don't really want to be there, who are kind of just there collecting a paycheck, investing. That's actually a strategy. It's like, get into Google and just let your stock options vest and chill. Don't shake the bush. Don't do anything crazy. Just let your stock options vest and get rich. Because that's actually what a lot of people do, and a lot of companies do, is they'll get job offers for like $200,000 salaries, but then they'll get these option bonuses of like $500,000 over the next 3 years. It's insane. This is why, like, if you could get into tech and these kind of worlds in terms of being an employee, oh, there's so much freaking money in it. Like, take it, right? Oh my gosh, there are actually Tesla chargers there. How cool. I'm going to walk over the Tesla chargers. This is the first time I've actually seen Tesla chargers in Germany. This is really cool, on my way to Munich. But anyway, so walk over there. But this productivity weeding that we're able to do, this is a very good thing. So the COVID pandemic allowed the first set of weeding. Everybody got laid off. Well, I shouldn't say everybody got laid off, but a bunch of people got laid off. And the idea was, don't worry, this is temporary. We'll hire you back when the pandemic's over. The companies, come on, let's be real. They only hire back the people that they need and the good people, right? Well, then demand went through the roof, and so they had to overhire. So you get one weeding round. The first weeding round lets you get rid of, 20% of your employees that are just slush that you don't want. Then you hire a bunch of new employees, and then you get to go through the weeding process again, and you cut 10 to 20% of the jobs. Now, we will look back at this. I hope I remember to go back to this video in the future. There are the Tesla chargers. How cool. German Tesla, that should be the thumbnail right there. I hope I look back at this in 10 years, and I think it's so critical if you're a long-term investor right now. The companies that you want to invest in are the companies that are doing the layoffs. They are the companies that are slowing down. What Apple and Tesla are doing, smart. It is smart to lay off. I hate to say that, but if we go into uncertain times, the best thing you can do, as we are clearly, the best thing you can do is take advantage of your second round of weeding. And now, in 5 to 10 years, we are going to be looking at some of the most efficient companies ever to exist. And America, I think, will be the front runner of the most productive and efficient companies in the world. So personally, when I saw this news about Apple slowing spend on hiring, I was excited. But it's not just because of the productivity, and I want to talk about the lawsuit briefly. It's also because we know that the Federal Reserve is literally trying to get joblessness to happen. Because what they want these layoffs, because if they have these layoffs, then those people have to go get another job. When those people go get another job, what do? They reduce job openings. So then all of a sudden, instead of having 1.9 job openings per unemployed person, we end up getting closer to equilibrium, which would be one job opening per one unemployed person, right? That's what the Fed told us they want to get to. So if they can crimp down inflation by doing that, bingo, then that's the goal, and that's what they're accomplishing. So these headlines about slowing housing, about layoffs, are exactly what the Fed want. And the more we see these headlines, the less likely we actually are to get Paul Volckered. And this is why inflation expectations are coming down. So across the board, this is great news. Now, what's this news about this new lawsuit? So, okay, in Europe, there was a lawsuit against Apple for Apple Pay because certain payment processors thought it was not fair that Apple basically prioritizes Apple Pay over as a method of payment, no matter what the credit card is that's being used, over like PayPal or Venmo, right? Like if you double click on the side of your phone, all your Apple Pay credit cards show up, which could be the Apple credit card or could be another credit card, but it's not PayPal or Venmo or the other things. And so in Europe, there were these antitrust claims that basically Apple should allow you to double click on the right side and maybe you set the default to PayPal or something else. Well, it looks like now card issuers are filing an antitrust lawsuit against Apple in the United States. I don't know yet what the details of this are, but I'm going to guess these are going to be companies like, quite frankly, it could be companies like Affirm, PayPal, Venmo, maybe even Visa, MasterCard. I don't have all the details yet, but let me see if they load here. The complaint was just filed, San Jose, California, and the iPhone maker exercises its market power in the device markets by requiring that customers of its mobile devices also acquire its mobile wallet, Apple Pay. Well, that's not necessarily true. And prevents customers from using competing mobile wallets capable of offering competing tap-to-pay solutions. According to the complaint by Affinity Credit Union. Yeah, I mean, that's kind of the argument, again, that you can't, like, tap-to-pay with PayPal as easily. By double-clicking the button, you have to actually go into the app, right? Long term, is this a big deal for Apple? No. Worst case scenario, they have to put a little button in if they lose, but they'll just fight it to the end in the meantime. Again, overall, I'm actually bullish on Apple. If I could pick some of it up at 135 again, bring it on. It's at 149 right now. I sold mine at like 180, which I was happy about, but also not really happy about because I love Apple. It is one of the first stocks that I bought ever in like 2008 and 9, which was pretty epic. Didn't have a lot of money to buy with back then, but I did buy Apple, which is great, and I kind of just DCA'd over time. But anyway, I gotta go. Kids are getting mad at me. Thanks for watching. 50% off coupon code is expiring soon, and the price goes up again. So join those programs on Building Your Wealth and join me in the private live streams. Get the Lowe's proposed benefits. Get all of my insights on real estate. Know when I'm going to be buying again, what I'm buying, what I'm looking for in deals. Learn all of that in our private live streams, and join me for the fundamental analysis. We'll see you soon. Thanks. Bye.